This conference will now be recorded.
Sir, can you hear me?
Yeah, sir. Good morning, Aniket bhai.
Good morning, Jagrat bhai, Thacker sahib, Ramesh bhai, કેમ છો?
Oh, મજામાં સાહેબ.
બસ સર દિલ્હી જઉં છું, એરપોર્ટ પર છું અત્યારે.
Okay.
Good morning, Nihar bhai.
Good morning.
So
Good
start
morning.
करेंगे
Good
सर.
Can you start or because
Aniket bhai,
see Aniket.
start.
VP sir, I'm here.
Sir.
No, I was just saying you are on airport, and after this is over, I will be starting for airport. So if we can start on time, better.
Yeah.
If
so we can
we
start,
have come
start
that,
it now. So we can start now. So Purvi, you can start.
Good morning, જીતુ ભાઈ હવે આવે છે બસ?
Yes.
આવે છે. You can start. Purvi, start कर दो.
Good morning, everyone. Hope you all are fit and fine. On behalf of Bhuj branch of WIRC of ICAI, I heartily welcome all of you at this marvelous Monday morning. I specially welcome our Vice President Sir, Chief Guest Sri Nihar Jambusaria Sir, and our Guest of Honor CCM Sri Aniket Talati Sir. Welcome, sir. We are really very fortunate that our Vice President Sir and Aniket Sir are with us on this auspicious occasion of launching of our branch website. Friends, I am pleased to inform that our branch's own website is going to launch today. ICAI has successfully gone digital for quite some time, and having one more branch with virtual footprint may be a very tiny step for the ICAI, but for a small and new branch like us, it is nothing short of a giant leap. Now I would like to request our branch chairman, sir, Sri Jitendra Thacker, sir, to address all of us. Jitendra, sir.
Thank you, Purvi madam. Good morning to all of you. The chief guest of today's program, Vice President of ICAI CA Nihar Jambusaria ji, Guest of Honor CCM Aniket bhai Talati, Speaker of today's CPE session Abhay bhai Desai. Sir, Bhuj branch is a small branch having around 200 members and 400 students. I will give just brief idea and history about the Bhuj and association with the ICAI. Sir, about 60 years old connections with the ICAI with the Bhuj as many seniors are practicing since long. And in 2005-06, Bhuj CPE chapter was started, and in 2009, Bhuj CA exam center was allotted by the ICAI to Bhuj, and in 2010, Gandhidham branch in our entire Kutch district was inaugurated. So we were come under the jurisdictions of the Gandhidham branch, and in 2016, Bhuj branch was inaugurated, and we are regularly doing the activities for the benefit of members and students regularly. So some of the activities like we are organizing CPE hours, CPE programs for the benefit of members, and we are promoting local members as a speaker, and it is our traditions to discuss the budget on the next day of presentation of budget, and we are regularly issuing the newsletter covering the technical subjects, and we are celebrating various days like CA Day, Republic Day, Independence Day, and York Day every year. And for the students, we are organizing mock test, quiz and allocation contest, and sports events regularly for every year. Even we are in the jurisdictions of Gandhidham branch. These events was held in Bhuj itself. In year 2020, in last year, sir, we have done all the activities as per the traditions of the Bhuj, and also we have tried to do the various activities considering the requirement of time as per the best of capacity. And in through the February 2020, we have shifted our branch office in a new and big premises, and in March itself, we have decided to have a branch website to serve members and students in a better way in this high-tech world. So today is our branch website is ready after many hurdles. So today is the big day and celebration day for the Bhuj branch to have our own website and ready to launch with the worthy hands of our vice president and chief guest, Nihar Jambusaria. So I am welcoming as chief guest and vice president of ICAI, CA Nihar Jambusaria, and I am inviting on behalf of Bhuj branch managing committee to launch our website with your worthy answer. I am also thankful to you, sir, for showing your love and affections toward the Bhuj branch and accepting our invitations and remain present in spite of your busy schedule. So thank you, sir. And I am also welcoming guest of honor CCM Aniket by Talati. I am thankful to Aniket Bhai for providing the guidance and support during the course of development of website and coordinating this event. And so thank you Aniket Bhai for your kind support. I am also welcoming today's speaker Abhay Desai, and we can say about the Abhay that once you listen to the Abhay, you will never miss to listen to the Abhay. So I welcoming and thankful Abhay for sparing your valuable time, and I am also welcoming on behalf of Bhuj branch managing committee all the past chairmen of the Bhuj branch, C. Doshi, Bunty Popat, C. Bhavi Thacker, and C. Darshan Khandol. And I am also welcoming all the seniors of the Bhuj branch, younger members of the Bhuj branch, and future chartered accountants of Bhuj branch. Thank you.
Thank you, Jitendra sir. Now, I would like to request our guest of honor, CCM Sri Aniket Talati sir, to say few words on this auspicious occasion. Aniket sir, please.
Thank you very much, most honorable Vice President of the Institute of Chartered Accountants of India, and somebody who, within a period of few weeks, is going to be our all honorable President of the Institute. Thank you so much, Nihar bhai, on behalf of each branch, on behalf of the entire managing committee, for accepting the invitation and making this a landmark moment for the branch. Personally, thankful to you, sir. Chairman Jitu bhai, Vice Chairman Ramesh bhai, Secretary Ashish bhai, Purvi ben, the Treasurer, all the honorable past chairman, Doshi sahib, Bhavi ben, everybody else who's present here, all the seniors in the profession. Thank you very much for inviting me. I think today's day is for Nihar sir to inaugurate the website. And I think since he's present, it is his prerogative to discuss about the ICI and other matters. I will only restrict my comments today to congratulating the entire hardworking managing committee of Bhuj branch. And this is not just this term. I believe every year, each of you has tried to do better than what the previous chairman would have done. I think it is the right spirit in which our institute has evolved. I had the privilege to come there last year to inaugurate the physical infrastructure when we moved to the new branch building. And Praful Bhai, who was the then Honorable President, had requested me to go there. And today, when we are dedicating this website, no better person than Honorable Vice President Nihar Bhai, who's from our region, who has received love from across Gujarat, Maharashtra, and now, of course, entire country, who will be inaugurating this website. I can only say that I am extremely humbled and pleased that my association with Bhuj has been far before even the Bhuj branch got inaugurated or even the Gandhidham branch got inaugurated. I have been visiting there for so many years. In fact, from when I was pursuing chartered accountancy, and it's therefore extremely special for me each time that there is an event at Bhuj or Gandhidham that I'm invited or I'm a part of it. And I'm sure as we have moved to a better physical infrastructure with this website under the leadership of the new entire managing committee led by Jitu Bhai, who's very young, dynamic, and working extremely sincerely, even in this pandemic times, to give the best programs to the members. This website will be an additional feather in your cap, Jitu Bhai. I think you, Bhuj branch, Anand branch, Anidam branch have done so many programs in this lockdown period. You have done a human service for the membership. And I can only sincerely hope that going forward also, if the branch keeps the activity in the same pace. And I finally, once again, thank Honorable Vice President, sir, for doing the honors for Bhuj branch. And let me congratulate all members on this historic occasion. Thank you very much.
Thank you. Thank you.
Thank you so much, Aniket sir. Whenever needed, WIRC team and ICI team are always very supporting for us for any kind of branch activities. So that thank you so much, sir. Now I would like to request our today's chief guest, our Vice President, sir, to launch the websites and address us. Sir.
Okay, so first is the address or and then launching the website or?
Sir, first we have to address.
Yes, sir. Sir, please
Okay.
address us.
Yeah, good morning, everybody. Chairman of the branch, CA Jitendra Thacker, my colleague, esteemed Honorable Central Council member, CA Aniket Talati, the Vice Chairman, Secretary, Treasurer, past Chairman of Bhuj branch, and all the members. I think it is very good that a small branch, which is a 4 years old baby, is launching its own website. But at the same time, let me mention that time has come when wherever you are staying in any part of the world, if you are techno savvy, then you are not staying in any remote area. Perhaps 1 or 2 years back, if I had visited Bhuj branch, you would have said that you are in some remote area and you are not connected to the world and you have certain disadvantages as compared to those who are in cities like Ahmedabad or Mumbai or Pune or Delhi. But this pandemic in last 8 to 9 months taught us all that now territorial distances are not at all relevant. The boundaries are not there. The world has become boundaryless. You require visa to visit any other country, but to interact virtually, you don't require any visa. And today we have seen that in last 8 to 10 months, we connected with international bodies seamlessly. We were connected with our overseas chapters on virtual mode, and we have enjoyed all the benefits of being placed in any part of the country because we got inputs, the much required inputs from every part of the world. When we were supposed to give inputs to the government, and let me give two examples, one on how to bring foreign investment in India fast in this time when there are a lot of opportunities. Our foreign chapters very specifically contributed that in this particular state, these are the obstacles. In this particular city, These are the obstacles, because their employers or their clients in their country who wanted to invest in India, whatever obstacles they faced, they shared with us. We shared all these obstacles with Niti Aayog, and government also wanted inputs on ease of doing. Again, from our country and from abroad, number of inputs were received and we communicated to the government. And what I am trying to tell you is that now stop telling yourself that you are placed in Bhuj. You are part of the global village, and sitting there, perhaps you can perform better than me. And why I am giving my example? Let me tell you, today, when pandemic was there and I could not go to Delhi, I used to go to Bandra Kurla complex, our Mumbai office. During pandemic, in the initial time in April and May, I used to travel within 30 minutes. And today, if I have to go to BKC, I take 2 hours in the morning. And when I return in the evening, it takes 2.5 hours. This wastage of time you don't have to face sitting in Bhuj. Your residences and offices are very close by, and you can travel easily. And your working hours are more by 4 hours as compared to me. You try to think what you can achieve. If you use this technology to your fullest advantage, what is your advantage as compared to people like us who are in big cities where traveling is a big hurdle? So now number of opportunities are coming up, and make your website one of the best websites, and make it a tool for brand building of the branch. Suppose somebody has to think, I want to give some work on outsourcing basis to a member in Bhuj. If that person accesses your website, he should get an impression that Bhuj is fully updated, its members are very capable, and I can give work to them. So use this website to your fullest advantage. I'm sure that when a council member like Aniket is in your state and very close to you, he will help you update the website with the latest developments. And he is a techno savvy person. The entire digital learning hub he has designed for the institute, I'm sure he will do it for you also whenever required from time to time. So make use of that. And when I'm given this opportunity to speak, I think I will speak about 2 or 3 very major initiatives of the institute which can directly help you. One is the number of courses on technology which Digital Accounting and Assurance Board has launched. Go through the entire list and you will find some of these courses are very useful sitting at home or sitting in your office. You can serve any client anywhere. And once you learn some of the techniques like robotic processes or data analytics, you will find that you are so powerful as chartered accountant that nobody can compete with you. Secondly, the institute this year came out with DCMM2. Now DCMM means Digital Competency Maturity Model. The name looks complicated, but it is a simple concept. If you want to test how much updated you are on digital, that is technology, you can access this model, which is on our website, and start answering the questions which are there. And at the end, when you answer all questions, this model gives you mark out of 100 how much you have scored. And this improved model too, wherever you are found to be weak, the model itself gives you guidance to improve what you should do, which course you should attend, which book you can refer, and how you can improve. So on technology front, this model can help you to develop and advance and become absolutely hands-on with technology. This year, the institute set up what is called Center for Audit Quality. And the Center for Audit Quality has come out with another such tool, which is called AQMM, that is Audit Quality Maturity Model. In this model, several questions are asked regarding how you conduct your audit. And when you answer these questions and complete answering them, at the end it will give you marks. Now these marks will indicate what is the audit quality of your firm. Again, this model is yet to incorporate features for giving guidance how to improve. But this is a self-evaluation tool. Particularly, this is the world of documentation. And if you are having appropriate documentation with you, suppose sometimes somebody lodges complaints against you, these documents will be absolutely handy to you in proving your case before any disciplinary authority. So these are some of the tools which Institute has developed this year. We are going ahead with developing many more such tools for you. And this year we are also aiming to finally launch audit tools developed by the Institute, which will be useful to you. So these are some of the initiatives, and since today it is time to launch the website, I will not talk at very length, very detail of what are the other smaller initiatives of the Institute. We'll take up at some other time. And lastly, one common question which is being asked by members, what about date extension? Institute has applied, Institute has represented. Let us see, only astrologer would know whether Finance Ministry will finally give extension. But let me at the same time tell you, I know that there are difficulties in COVID time, but at the same time in COVID time, we have done so many things virtually. Going forward, please educate your clients that it is their responsibility to give their accounts to you for audit in time, that is at least 1 month or 2 months before the due date. It is not our duty to go to government and every time ask for extension. So if extension is required, actually the client should apply. Still, the Institute has done its best. Let us see what happens. I am sure at Bhuj, you would all have completed your audits by now. And if you have not completed, then let us wait for extension, or try to complete by 31st December so that you can cherish, rejoice the new year on 1st January. So at this stage, wish you all a very happy new year 2021. I'm sure world will be different and will be progressive, and we will all grow in the next year to come. Thank you so much for inviting me. Back to you. I have completed.
You are now
Thank you
presenter,
so
so
much,
you
VP
can
sir.
see
Yeah.
your screen.
Yeah.
Varun bhai,
Yeah.
can you guide?
Yeah. What is to be done? I don't see URL here.
Yeah.
So
Purvi, if we
Bhuj,
can launch the website.
yeah.
हाँ
Varun
जीते
bhai,
भाई
1 minute. Just sir, share your screen and open the Bhuj branch website, bhuj-ici.org.
I will have to open, or you are putting it on screen?
Yeah,
What is to
just
be done?
you have to open the URL and share your screen, sir.
Share my screen, open the URL and share the screen. Okay, 1 minute. You have sent URL on email or?
Bhuj-ici.org.
Okay, 1 minute. Somehow this is not getting minimized. 1 minute. 1 minute.
Herman, if it is possible, you can share the screen and sir will launch it. This August stands in his presence.
Yeah, if you can share, it will be ideal.
Yeah.
Can you do it? Can you share or
You can,
I can
sir,
come.
share your screen and just launch the site. Share your screen, sir.
Actually,
Hello.
screen sharing. So I'm not able to
Yes.
share it from
Yeah.
here.
Hardik bhai, if you can, or some other member who's on the computer, if you can share, if it's possible.
1 minute.
જાગ્રત ભાઈ કે કોઈ બીજાથી બી શેર થઈ શકે સરની પ્રેઝન્સમાં આપણે લોન્ચ કરી દઈએ.
Or you tell me what is the name of the URL? Is it www.
Bhuj.
Bhuj.
Des
Sorry, Bhuj.
ICI.
Yes.
Sir, I have
Bhuj
written
Des
on
or
the chat box, sir.
Okay,
Bhuj
one
Des
minute, I
ICI.org.
Bhuj Des ICAI. Okay.
.org.
1 minute.
Varun bhai, can you on live so you can guide? Varun bhai.
हेलो
વરુણ ભાઈ જરા ગાઈડ કરજો ને સાહેબ ને.
સાહેબ યુઆરએલ માં લખો bhuj-ici.org આપણું જે આ છે ને ગો ટુ મીટિંગ એમાં ઉપર ચેટ નું છે જો એમાં યુઆરએલ મેં મૂકેલી છે ચેટ તમે
એક
ખોલશો ને તો
મિનિટ.
ડાયરેક્ટ યુઆરએલ આવી જશે યુઆરએલ
હા
આપણું રાઈટ સાઈડ ચેટ હશે એમાં જો મેં યુઆરએલ એની ઉપર ક્લિક કરશો ને તો ડાયરેક્ટ યુઆરએલ માં જશો.
એક મિનિટ. ઓકે ક્લિક. હા એક મિનિટ ઓપન થાય છે એક સેકન્ડ.
ઓકે સાહેબ
now
તમારે
it is
સ્ક્રીન
open.
સ્ક્રીન શેર કરજો
સ્ક્રીન
સાહેબ.
શેર મને અલાઉ કરવું પડશે એ નથી થતું અહીંયા. એ કહે છે કે યુ હેવ બ્લોક્ડ ધી સ્ક્રીન શેર એમ કહે છે.
સર તમારે કેમેરા ઓન કરશો સાહેબ.
કેમેરા ઓકે કેમેરા ઓન કેમેરા પણ ઓન
ચેરમેન તમારે એડમિન એમને પેલા પેનલિસ્ટ રાઈટ આપવા પડશે એમને તો જ થશે.
હા ના સાહેબ એમ
હા કેમેરા ઓન કર્યો હવે
ઓકે
સ્ક્રીન માટે છે
उमंग को फोन लगा दो
હવે સ્ક્રીન આવે
ईमेल को लॉगिन करने का ट्राई करें wood.dl में.
Can you see the screen now?
yeah sir your screen I can show and you are now presenter sir you can present now you are organizer so you can send make you organizer. Sharing option is there?
No, see before me it is your website is open, branch name, address, office bearers, everything.
Sir, your name
kindly,
is
kindly refresh
status. Sir, I'm saying showing your status that waiting for name. Just type your name. So just because some issues there, presenter and organizer.
ના ચેરમેન નામથી નહીં થાય ખાલી
1
સ્ક્રીન
minute.
શેર કરવાની છે જો તમારાથી થતી હોય તો કરી જો એમનામાંથી સ્ક્રીન શેર નથી થતી.
ઓકે ઓકે વરુણભાઈ જરાક યુઆરએલ ઓપન કરો ને.
હું કરું
હા
ઓકે મારે ઓપન જ છે.
ओके तो तुम्हारी प्लीज सर नाउ यू आर नियर जी आप ऑर्गेनाइजर है तो कैन यू मेक मी ऑर्गेनाइजर बिकॉज यू आर नाउ ऑर्गेनाइजर.
Now what should I do? Tell me.
Just
first I should go to URL.
Yeah.
Yes sir and refresh the
chat.
refresh the page.
Okay. This I have done. હવે it is
એક
open.
મિનિટ 20 ઓકે ખુલી ગયું
It is opening and it shows it will be launched in 36 seconds. But then should I તમને સ્ક્રીન પર
રિપોર્ટ નથી
દેખાય
આવે
છે?
ને
સ્ક્રીન શેર કરવાનું બતાવે છે સર?
Somehow I don't know how this is not getting shared. So સ્ક્રીન પર ક્લિક કરીને પણ આ વેબસાઇટ પાછળ ઓપન છે પણ આ આવતું નથી સ્ક્રીન પર. And
Okay,
it was
just
showing only
we are,
36 seconds.
sir, I'm just trying second time to make you presenter.
સર મેં ટાઈમ વધારી દીધો છે લોન્ચિંગનો 2 મિનિટ. તમે સ્ક્રીન શેર કરો ને ત્યાં સુધીમાં તમારે પાછું પેજ રિફ્રેશ કરવું પડશે. એકવાર સ્ક્રીન શેર થઈ જાય ને પછી
હા દેતો. Hello. Now you are presenter.
Oh.
So try it once again, sir.
Now share your screen. I have clicked
Yeah.
and
Yes,
then
yes.
come to hello.
Ah. Sir, now you are able to share your screen?
I don't know why it is not happening, but somehow screen share જ નથી થતો. I don't know કેમ.
ચેરમેન તમે બીજા કોઈને સ્ક્રીનથી કરી દો ને શેર. સર પાસે ખાલી બટન ક્લિક કરી દઈશું. તમારા એક વરુણભાઈ કે કોઈ બીજાના કમ્પ્યુટરથી કરી દો.
હા વરુણભાઈ તમારે ત્યાંથી શેર સ્ક્રીન કરો ને વરુણભાઈ.
જીતેન્દ્રભાઈ મારી પાસે રાઈટ નથી પ્રેઝન્ટર મને આપવું છે.
તમારો સ્ક્રીન શેર કરો ને શું કે વિડિયો ઓન કરો એટલે શું થાય કે હું તમને પ્રેઝન્ટર બનાવી દઉં.
જીતેન્દ્રભાઈ સ્ક્રીન શેર કરી દો. તમે પ્રેઝન્ટર હશો ને.
તમારી
જેણે મીટિંગ
તમારી
ઓર્ગેનાઇઝ
screen share
કરી છે
કરી
પ્રેઝન્ટર છે તમારી સ્ક્રીન.
ઓકે સર. Sir, can you see the screen? Hello.
Yes, yes, yes.
Yes.
And now we can see. Yeah.
Yeah.
So you can launch it from there, and I think.
This is the automatic process. So you are just launching the
Hmm.
website. Was showing 1 minute and 6 seconds.
Hmm.
Congratulations to entire managing committee, chairman and બધાને. Vice President sir ના હાથે આજે launch થાય છે website. Congratulations to entire Bhuj team.
Okay, thank you, sir, Nihar ji and Aniket bhai, for sparing your valuable time.
Thank you Abhay bhai for coming to Bhuj. Thank you sir.
Chalo, congratulations to you all.
Sir, just launching the site, sir. Just wait a few minutes. Just 30 seconds is.
Yeah.
Thank you, sir.
Yeah.
Thank you, sir.
Yeah. Thanks. Congratulations.
Thank you,
Thank
sir.
you so much
And
Vicky sir.
now,
Thank you sir.
Thank you.
Purvi,
Hmm.
just give the vote of thanks.
Thank you, sir. Thank you, Nihar sir, for giving us the idea about invitation to initiative tools and courses offered by the ICI. On Bhuj branch, on our branch behalf, I can give you assurance that our members will be surely update themselves. We will surely try to update ourselves, and we are confident that our members will be fully benefited by this website. Thank you so much,
Sure.
Nihar sir and Aniket sir, for accepting our invitation and sparing your valuable time with us on this virtual platform and made this occasion very memorable. Thank you once again. Thank you so much, sir.
Thank you.
Thank you. Thank you
Congratulations
everybody.
to
All
you
the
all.
best.
Congratulations. All the best. Bye.
Thank you Vicky sir. Thank you.
Thank you. Thank you. Bye.
Thank you.
Thank you, sir.
Now,
Thank you, sir.
yes, now we are going to start our second session, today's CPE session. Today we are having an eminent speaker, Sri Abhay Desai sir from Baroda. Welcome, sir. He is going to share his knowledge on current issues in GST, a very relevant topic in today's scenario. So I would like to request our branch Vice Chairman, Sir, Sri Ramesh Bhai Pindolia, to give the introduction of our today's speaker. Ramesh Bhai.
Respected speaker of today's webinar, CA Abhay Desai sir, members, managing committee members of Bhuj branch, and my professional colleagues as well as CA students of Bhuj branch. It is my great pleasure to give brief introduction of eminent faculty CA Abhay Desai sir. Abhay Desai sir is All India rank holder at CA examinations. He has done LLB as well as DISA qualified. Started practice right after qualification with Yagnesh Desai and Company. He has recently authored the book on Sabka Vishwas Dispute Resolution Scheme 2019 published by Chamber of Tax Consultants Mumbai. Has also authored the book Get Ready for GST. He has been co-opted as member of Indirect Tax Committee of ICAI, member of GST group formed by ICAI to make recommendations to state and central government. He has addressed more than 400 seminars on indirect taxation till date. He has made representations before the Finance Minister of India as well as Deputy Finance Minister of India on various issues under GST. Presented papers at Delhi, Bangalore, Ahmedabad, Baroda, Surat, Mumbai, Nagpur, Ranchi, Guwahati, Vapi, Gandhidham, Bharuch, Anand, Nadiyad, Rajkot, Daman, and many more cities across India on various issues in indirect taxation. He has published more than 200 articles. Articles are regularly published in GST Law Times by Sentex, GST Journal by Taxman, Tax Guru, GST Journal, Cell Tax Journal by Bar Association. Abhay is board member of an NGO based at New Delhi. He is advisor to Fortune 500 companies as well as large number of listed companies in field of the indirect taxation. He is winner of all Gujarat elocution competition held by Bar Association, awarded as best column writer by the Gujarat Cell Tax Bar Association, a brain trustee in all Gujarat seminar by Bar Association, treatise on recovery and attachment proceeding under GWAT law has been published in International Research Journal of Management and Commerce published by Associated Asia Research Foundation. Abhay can be contacted at abhay.desai@ydco.in. With a brief introduction, I will request Abhay Desai sir to take the charge of this session. CA Abhay Desai sir.
Good morning, everyone. First and foremost, I am thankful to Jitu bhai for giving me this kind opportunity to share my views on certain very important changes that have taken place in the field of GST. Honorable Vice President Aniket bhai, all the fellow members of the Bhuj branch, it is again my honor that on the day of the launching of the website, I have been asked to take a session. Now, friends, before we start, just on a lighter note, as you would have seen in the last 10 minutes, that the launching of the website and transferring the data from one screen to the other screen had a lot of technical challenges. And imagine that what the government wants us to do is to ensure that the invoice from one GSTN to other GSTN is seamlessly transferred, and only then the recipient will be able to claim the credit. So when a transferring of a screen on a software can be a challenge, imagine what would happen once we get into the month of January. As Honorable Vice President rightly said, that if one is able to complete the work on 31st December, one will be able to enjoy the new year on 1st of January. But that enjoyment, in my opinion, would not last long, because once the month of January will end, and once you sit down to file the return for the month of January, you will realize what kind of pain and what kind of cash flows that it will entail when the person is supposed to comply with the whole new set of requirements that have come in the last 1 week. Now, friends, today's agenda would be that first we'll consider the important notifications that have been issued in the last 1 week. Try and understand not only from the perspective of portal, but also from the perspective of law, that how far those changes are aligned with the provisions of law, and how the courts have considered such similar issues in the past, be it the pre-GST regime or in fact even under the GST regime. Then we'll consider the new quarterly filing scheme that has been launched that will come into effect from 1st January. It's largely procedural, but we'll have a look at the entire scheme and the issues that will emanate that are to be kept in mind for a person who is going to opt for that particular scheme. And as I understand, in fact, we are sitting in a month where everyone would be extremely busy. I am indeed surprised that a lot of participants, members are still with us. And hence I will try and keep my presentation as short as possible so that we can all return back to our regular task of completing the December 31st due date related assignments. Now friends, in GST, you would be aware that the GST rules from the inception, that is from July 17 till date, have been amended 51 times. Now 51 is a number that we consider auspicious whenever we used to have some good functions in our family. We always give some money which is rounded up to 1. So it could be 11, it could be 51, it could be 101, it could be 1001, but we always add 1 to the round figure because that we consider it as auspicious. So similarly, the 51st amendment has done the similar thing. It has given us a very good gift that we will study now in detail. Now, before we start, if you know the way return filing system has evolved, initially we were under the impression that GSTR 1, 2, 3 is going to come when the GST was introduced. That got replaced by 3B. 3B posed its own challenges. Then for quarterly filers, a scheme came. Then we replaced that with a scheme called where the returns in the form of Sahaj and Sugam were introduced with ANX 1 and 2. But then that before its implementation, that was taken back, and now we have the new scheme for quarterly filing. So the landscape is evolving, and this reminds me of a very good anecdote that if someone who is practicing in GST would immediately recognize. It happened that during the times of Socrates was considered to be the wisest person on the planet. So during the time of Socrates, the king at that time declared that Socrates is the wisest person on the planet. So the followers of the Socrates who were with the king became very excited, and they rushed to Socrates to give him this good news that the king has declared you as one of the wisest person on the planet. So they went to the Socrates, they told him that the king has declared you as the wisest person. So what is your reaction? So Socrates said that I don't know. In fact, I don't know anything at all. So I don't know why he has declared me as the wisest person. So the followers became disheartened. They became sad. They could not understand the reaction of Socrates. So they went back to the king and they said that you have made a mistake. You have declared Socrates as one of the wisest person on the planet, but he says that he does not know anything. And so I think it is wrong what you have said. So either you should take back that tag that you have given it to Socrates. The king replied that it is only because he knows that he does not know that he is the wisest, because a lot of the persons that we come across really don't know that they don't know, and therefore they never make an attempt to know what they don't know. Socrates is wisest because he knew that he does not know anything, and that basically pushed him to keep making attempts to really open the mind and keep learning new things as he went ahead. So I think the same philosophy we all should percolate in ourselves, that we should all look at GST from the perspective of not knowing it and knowing that we don't know it, because that will really open up different features, different dimensions of this particular law. Now, having said that, let us start with the first topic. In fact, I'm not going to use PPT today. The reason is that recently, actually, I came across a very good book by Jeff Bezos, the founder of Amazon. In Amazon, they are not using PPT. And so Jeff Bezos was asked that why don't you use PPT in Amazon? I mean, it is the largest company on the planet, and you have number of meetings. Why don't you use PPT in your meetings? So he replied that we have a philosophy that I developed way back in '95, that any communication that you want to do, you should do it in the form of a narrative, because only a communication in the form of a narrative can be really understood by the participants. A PPT gives a very simplified form of reality, and in fact the reality is much more messier and much more complex than what PPT makes us believe. And therefore he said that we discontinued the use of PPT in Amazon. Now today's reality is similar. It is very messy, it is very complex, and hence PPT would not do justice to this particular topic, and hence it is better to have a one-to-one dialogue on the various issues that we are going to look at rather than looking at the PPT. Now, friends, notification 94 came to be issued. The intention of the notification, as apparent from the communications that has been done by the board, is to tackle the menace of fake invoicing. Now, invoice in our country is a commodity. The way we sell goods or provide services, there are certain people in our country who have a business of generating and selling invoices. Now, for those people who are in the business of generating invoices which are not backed by the underlying supplies, the government aims to curb that menace. You have seen in the last 2-3 years, number of fake invoicing records have appeared. The amounts are mind-boggling. We are often reminded of the 2G scams when we look at the amounts that we read in the fake invoicing records. On the other hand, the reality is also that the collections against the amount reported is less than 1% in terms of revenue. So a lot of numbers really are something which helps us wonder that what is going on in this country. So to tackle this menace, the government has been trying a lot. Initially, the Gstr 123 system was supposed to tackle it on the basis of self-correction itself. But since that system could not be introduced, and a system was open for the fraudsters to take advantage of. They introduced the e-way bill in 2018 to somehow tackle this, but still then the frauds continued. They introduced certain systems of verifying the credits with 2A that got then replaced by 2B. Also from GSTR1, they thought of trying to borrow the figures reported in 1 and trying to reconcile or match with what the ultimately taxpayer reports in his return and pays the tax. So a lot of challenges were there. Government tried their best to try and tackle those challenges. Somehow still the frauds continued. So this last salvo has been launched on the taxpayers across India in terms of notification 94, giving widespread powers to the government to stop your business. It can bring a halt to your business altogether, merely on the ground of suspicion. If the officer, on the other hand, is suspicious about the reportings that you are doing, he has a power to suspend your registration. Once the registration stands suspended, of course, you cannot make any taxable supplies. You cannot generate any e-way bills, and therefore virtually the business will come to a halt until you go to the officer, make him explain the anomaly that he finds is a cause for the suspension. If he is convinced, he will restore. If he is not convinced, he will cancel it. Once it is cancelled, the only remedy would be either you go straight away to the High Court, challenging the cancellation of registration on the ground of arbitrariness. If you don't incline to go to the High Court, then the remedy would be to file the appeal, challenging the order of cancellation of registration. But as you all understand, that mechanism takes time. Until the registration is not restored, of course, the businessman would not be able to do his business. He will not be able to make any supply. So it is very harsh. A small mistake, a small anomaly can result into a complete halt to your business, to our client's business, and hence this needs to be understood in a very best manner. Otherwise, not only understood by the practitioners, but it is to be understood by the trade much more than what we understand, because actually the businesses that are going to stop will be up there. And hence it is very important that once December ends, kindly call all your clients to your office, have a seminar with them, try and make them understand the changes that we are going to discuss today in their language, in the way in which they understand, so that when the January filing starts and the chances of breach or the chances of not following notification 94 are minimized. Of course, however hard you try, as we will see, there will be a lot of instances where the discrepancies would remain. But in absence of a remedy given in the notification, one will have to really see how the government, number one, is going to react, and number two, how the courts are going to react. So with that, let me start the basic issues. The first amendment that has been done why this notification is under Rule 36, Sub-Rule 4. Now, as you understand, in last October 2019, Sub-Rule 4 was inserted in Rule 36 to restrict the availment of ITC beyond 20% of the eligible ITC which is reflected on the portal, which is for which the transactions have been uploaded by the concerned vendors. So that 20% was reduced to 10% from January 2020, and now that 10% is now reduced to 5% with effect from January 2021. So with effect from 1st January 2021, the taxpayer under Rule 36(4) will be restricted from availing any input tax credit beyond 5% of the eligible credit, the details of which have been furnished by the concerned vendors. So that is what Rule 36(4) says. Number of issues will arise here. The first issue is that whether this will apply to the credits which are availed for the month of December. Earlier, when the rule was introduced in October 2019, they came out with a circular because the rule came into effect from 9th October. So they came out with a circular saying that this will only apply to the credits which are availed after the said date of insertion of that particular sub-rule. In my opinion, that is not in line with law, and the circulars definitely do not interpret the law. In fact, Supreme Court in Ratan Belting went ahead and said that even if the circular is in favor of a taxpayer, still if that circular is not in line with the law, the courts have a power to quash that circular. Of course, department cannot challenge their own circular issued by their board. That is a settled proposition. The department cannot consider that as an argument on their side when they present the case to the court. But of course, the court has a power to disregard the circular if the circular is not aligned with the law. That is what Supreme Court held in Ratan Belting. Now, why I'm saying the circular is not aligned with law on the issue of time limit is that if you look at Rule 36(4), it talks about the date of taking of the credit when this restriction comes into play. So the basic issue to understand is that when does a taxpayer take the credit? Does he take the credit when he records that particular supply, inward supply, in his books of accounts, or does he take the credit when he files his GST return in terms of 3B, and he reflects this amount in his return, which on filing of 3B gets credited into his electronic credit ledger? So is it the date of credit in the electronic credit ledger which is to be considered as the date on which he could have been said to have availed the credit, or is it the date on which he reports the credit in his books of accounts as the date on which he avails the credit? The way government has understood this issue and the way the portal has been designed, the government is clearly of the opinion that the date on which you file the return is when you are availing the credit. So that is basically the date on which the credit gets reflected in the electronic credit ledger. That is the date on which the government would consider that the particular taxpayer has availed the credit. Now, by and large, this is aligned with law. Of course, when we go to consider the issues of time limit, the views are slightly different when it comes to application of 16(4). That is for some other day that we can discuss that. But for Rule 36(4), if we consider it to be a valid proposition, valid rule, we'll come to that aspect little later. But if we consider it to be a valid rule, then the rule, since it's a procedural rule which restricts the availment of ITC, that rule applies from 1st January 2021. So the amendment of 5% will apply to all the credits which are availed by filing 3B on or after 1st January 2021, irrespective of the month for which the 3B is filed. And I believe the portal is also going to be aligned with this view. We'll see that maybe in next week when one starts filing 3B And because as portal has also is also now highlighting the situations where there is a breach of this rule. So we will see whether that 5% cap would come into play from 1st January or not. But legally, if you consider this to be a valid rule, it would apply for all the credits which are availed on or after 1st January 2021. Now coming to the second aspect, the validity aspect, I will talk at the end of this particular issue. The reason is this, that normally as a taxpayer who is playing a role of a consultant, we normally advise to the clients to comply with the rule as much as possible. Of course, when there is a non-compliance and if there is a substantial amount involved, then probably the client can consider the aspects of questioning the validity of the rule. And hence I thought it fit that the validity issue will take it at the end. First, let us look at the rule as such. So number one, the date aspect is clear. Any credit, any return filed, 3B filed after 1st January 2021 would be governed by this rule 36(4), which now has a cap of 5% vis-a-vis the earlier cap of 10%. Now let us look at the aspects of how the rule will work, because the government has not been really candid enough to really come out with a real world example of how this rule is going to work. Of course, the circular was issued last year, which has certain examples, but those examples are very theoretical, which are not basically reflecting the real cases. Now, what the rule says, that the credit would be restricted beyond 5% of the eligible credit for which the details are furnished. The language, the word furnished was introduced now. The reason is that once we look at the QRMP scheme, you will find that for quarterly taxpayer, there is an option of furnishing the invoice details and not uploading the invoice details. So because of the change in terminology for quarterly filers, they also changed rule 36(4) to say that we'll consider the details of ITC for which invoices have been furnished. So it will include not only the regular monthly filers who file Gstr1, but it would also include the quarterly filers who are going to furnish the invoices using the invoice furnishing facility, which will be available on the portal from 1st of January for the quarterly filers. Now the rule says the 5% cap is to be applied on the eligible credits, the details for which is furnished on the portal. Now, from where do you understand that what is the amount of eligible credit for which details have been furnished? The reason is this, that what we see in 2A or what the reflection that we find in 2B may not be the amount of ITC which has details of which have been furnished on the portal, because till now we often come across situations where, despite the fact that the concerned vendors uploading the details in his GSTR1, due to technical limitations, those details are not getting completely and accurately auto-populated at the end of the recipient, and therefore the rule says you need to consider the details which have been furnished, not the details which you find are visible in your 2A or 2B. So that is number one challenge, that we normally consider what we find in 2A and now 2B as something which has been furnished, but there would be situations where there are certain ITCs for which details would have been furnished by the suppliers, but because of the portal issues, the same would not have been reflected in your 2A and 2B, and therefore if you strictly read the rule, even that ITC is required to be considered for purpose of determining whether this 5% cap is breached or not. Number two, the rule talks about eligible ITC on which for which details have been furnished, on which you have to apply this 5% percentage. So let us say in my 2B, when I sit on 20th to file the return, let us say we are on 20th or 21st of February, and now we are going to file the return for the month of January. When we download 2B, you may find that there is a credit which is visible of 100 rupees. In 2A, it is possible that 100 might become 102 because 2A is not static, 2B is static. 2A is a dynamic document. So in 2B, if you find 100, that would be the status on the 12th of February. It is possible that between 13th to 19th, or in fact for that matter even 20th, before you file your 3B, it is possible that certain vendors could have uploaded the Gstr1 for the month of January, although belatedly, so not getting reflected in 2B, but would be getting reflected in 2A, and therefore on 28th, for applying this rule, what should you consider as the eligible credit on which you apply this 5%? So do you consider 100, what is there in 2B, or let us assume 5 rupees of additional credit is also reflected in 2A on the basis of filing of one done by the vendors from 12th of the month, 12th of February to 20th of February. So let us say that is 5 rupees. So do you consider 100 on which you apply 5%, or do you consider 105 on which you apply 5%? As I said earlier, if you consider the date of availment of credit to be the date of filing of 3B, then the rule says when you avail the credit, you cannot avail beyond 5% of what is for which details have been furnished. So when I'm going to avail my credit on 28th of February, I need to consider in 2A what are the eligible amount of ITC for which details have been furnished by the vendors. If I find that that figure is 105, I would take an opinion that 5% has to be applied on 105 and not on 100, even though the portal is going to highlight this particular issue based on figure of 100, auto drawing it from 2B, but literal reading of the rule suggests that you need to consider 2A, and based on that you need to consider whether you are breaching this cap of 5% or not. And that is why, as I said earlier, the date of availment, if you consider it to be 3B, this argument becomes valid. If you consider date of availment to be your books of accounts, then perhaps 2B becomes a final figure, because if you are saying that you already availed it in the books of accounts, this restriction applies at the stage of availment. So if you consider that, let us say an invoice of 1st January, if I am availing it on 1st January itself, you will find that on 1st January there is nothing on the portal, because on 1st January the vendors, none of the vendors would have uploaded their details, and therefore if you strictly apply the rule, you will find that you cannot avail any credit at all. You need to wait till they upload, and on 11th of February, once the 2B is final, then it gets reflected, and hence the credit that you availed in the books becomes a valid credit, and then the comparison has to be done by 2B. But as I said, I would take a view that I would consider the figures of 2A on the date of filing of 3B, and the amount of credit reflected in 2A has to be considered as an eligible credit for the purpose of applying this particular restriction. Another issue will come up. In 2A, you will find number of credits which are otherwise not eligible. For example, if this particular taxpayer might have purchased a motor vehicle, he might have purchased certain building items for which he is going to do a construction and capitalize it in books of accounts. Now those are the ineligible credits which are reflected in 2A. Now how do you consider that when you apply this particular rule? Do you remove that and then compare it with the ITC which you intend to avail, or you consider that also as an eligible credit, but it has been denied by way of operation of section 17(5). So for example, in this figure of 105 that we consider in our 2A, which is reflected on 20th of February, let us say 15 rupees of credit is ineligible. It relates to purchase of car, it relates to purchase of materials which are used for building construction. Now, when you want to compare your credit availment that you intend to do for January vis-a-vis what is reflected in 2A, do you consider 115 or 100 for the purpose of applying this 5% cap? Strict reading would suggest that the word eligible has been used in Rule 36(4), that you cannot avail beyond 5% of the eligible credit. If you look at section 16(1), it uses the word eligible. It says that a businessman, a registered taxpayer, is eligible to avail the credit in respect of all the inward supplies on which tax has been charged. So 16(1) primarily allows you to claim the credit of 115, which is eligible. Then you apply the restrictions contained under section 17 to determine the amount of credit which is restricted out of this particular eligible credits, or the credits which are not eligible under section 17(5). Since the word used has been eligible, And since the law clearly demarcates under section 16(1) of what is eligible, and then goes and applies section 17(5) to remove from what is eligible, what is not eligible, what they call it as block credits, I would take a stand that when you look at this 5% cap, you need to look at the figure of 115, which is eligible for you, and on that you apply 5%, and then if you see whether your availment is going to exceed beyond that figure or not, let us say 5% on 115, it comes to 121. See, if you are going to avail the credit for the month of January of either 121 or less than 121, I would take a stand that you will be in compliance with this particular rule. There is no breach of this particular rule. Now, of course, the participants would be wondering that this seems not logical. The reason is this, that the ineligible credit in respect of vehicles, in respect of building, which anyway I'm not going to take in 3B, how you can consider that figure in 2A and then apply this 5% cap for determining my eligibility under rule 36(4), because a logical mind would say that we have to make an apple to apple comparison. If I am going to compare what I am going to avail in this particular month, where I would definitely not consider the credit for motor vehicles or building, then when I borrow the figures from 2A to apply this cap of 5%, why should I still in 2A consider these figures of ITC related to building or vehicles for that matter? Now, friends, what I would suggest is that law and logic are never married. In fact, the logic, what we consider it to be very vital, is often missing in law. The reason is why I'm saying this is, I'll give one more example in this particular issue itself. Let us say in rule 36(4), there could be differences of timing. An invoice issued in December, uploaded by the December in his Gstr1, but goods or services, let us say, have been received by the concerned recipient in January. So he would definitely consider this credit for the availment for the month of January. Vis-a-vis that, it is possible that the concerned vendors would have uploaded their invoices in the month of December. Now, in such situation, what would happen is that actually, if I want to make an apple to apple comparison, really in the figure of 2A, I should also then make adjustments for this timing differences. Similarly, in the figure of 3B, for which I want to avail the credit, I should again make an adjustment for timing differences. And after adjusting for this timing differences, then I should make a comparison, and then I should see whether my availment is exceeding 5% or not. Now, friends, if the government intended us to do the said exercise, it would definitely going to enter into what? Into a one-to-one transaction matching. Because if you get into the aspects of adjusting the comparisons for the purpose of timing differences, you will ultimately end up with one-to-one matching of the invoices. If one-to-one matching was intended, then perhaps rule 36(4) would have been definitely drafted in a much different manner, rather than the way in which currently it is drafted, where it looks at the overall comparison. And friends, even look at it from other perspective. Rule 36(4), in my opinion, is an anti-evasive measure. It is not a measure to determine your eligibility of the credit, because the eligibility of credit continues to be determined under section 16 subsection 2. It's an anti-evasive measure which is basically instituted to check the frauds happening in the country. So the reason is to make this overall comparison at the a level where you consider the aggregate ITC that you intend to avail vis-a-vis the aggregate eligible ITC which is reflected in 2A, also meets the objective that in cases where if some fraudsters want to really game the system and generate fake invoicing, definitely is not going to stop at 5%. He is definitely going to go beyond 5%. So with that aim, these percentages have been introduced. So the idea of government is also to consider an overall comparison and not to really end up with the one-to-one transaction matching. And hence I would submit that when you look at the application of rule 36(4), you need to look at the details which have been furnished till the time you file your 3B. From that amount of ITC for which details have been furnished, you consider entire ITC, because entire ITC is eligible under section 16(1). You apply 5% to that. And if your availment of ITC is going to exceed this figure, which you have derived at after adding 5% to the eligible ITC, which is there in 2A, if your ITC availability is going to exceed this figure, only then Rule 36(4) restriction would come into play. Otherwise, Rule 36(4) restriction would not come into play. If Rule 36(4) restrictions comes into play, and if, let us say, in this particular month, you have some amount which, based on the calculation that we just discussed, is going to be restricted, then the question would be, when can you avail it? Because ultimately that money is not ineligible. The ITC is not ineligible. It is merely restricted for the time being. The circular says you can avail it as and when those missed invoices are reported. Again, there is a challenge here, because as I said earlier, one-to-one comparison is not envisaged in this particular rule. In absence of a one-to-one comparison, the missed amount, the differential amount which has been restricted, to which invoices will you attribute? That becomes a very big practical challenge, because the law as such, the rule allows you a 5% room to go beyond what is there, which has been reflected. So when the law itself allows you to go beyond what is already reflected, and after that, if something is still to be restricted, to which invoices do you attribute is a major challenge. Again, the circular fails to address this particular situation, because the circular says, the circular again has been designed considering a hypothetical example where circular does not lay out the mechanism of attributing the restricted amount to a particular invoice. The circular merely says that this amount you can avail it in the subsequent period as and when proportionately the missed invoices are reflected. But in absence of a mechanism to attribute this restricted amount to the missed invoices, I would say again the rule is not clearly laying down any guidelines for the taxpayer to follow. So what should the taxpayer do? The practical approach that we have taken is that, let us say in this particular month, if let us say the formula gives me a figure of 121, I want to avail 125 based on my records. Now, certainly if I want to follow Rule 36(4), I cannot avail 125. I will have to stop at 121. If I stop at 121, 4 rupees becomes my carry forward ITC, which is there in my books, but not in my online electronic credit ledger. I go to the next month. In the next month, let us say my figures, the way I apply the rule, comes out to be that under 36(4), I could avail 120. But actually in the books, I'm only going to avail 110. So I still have a room of 10 rupees, which I can avail in my 3B, but without breaching the requirements of Rule 36(4). So my 5 rupees of balance, in my opinion, I will adjust in that gap which is available in the next month. And if by adding that 5 rupees to my next month ITC, if I'm not going to breach the Rule 36(4), then that 4 rupees which was restricted for month of January, I would avail it in the month of February. So when an aggregate comparison of this entire year would be done, the aggregate comparison would be aligned with the requirement of the rule. So I think that is how practically a taxpayer can look at applying this rule. A one-to-one credit identification at a transaction level with one-to-one attribution of the credit to a particular invoices becomes impractical, very difficult, and even the board is also not in a position, and rightly so, because given that this restriction applies at an aggregate level, one-to-one identification of this credit will not be possible. Now, but this again, I believe, will be a short-lived problem, because I think soon the government is going to come saying that you can only avail the credit of what is reflected on the portal. So this problem of 5% would be eliminated soon, because the government, I believe, are in the process of coming out with another set of amendment where the credit would be allowed only if something is there on the portal. So eventually we are going to move into a regime where you are going to become the officer of your suppliers. So before the officer asking your supplier to pay the tax, you will be after your supplier to ensure that he does the compliance and he pays the tax, because if he does not do that, your credit availment will not happen. So once we move into that regime, these issues of 5%, attributing 5%, where issues of how to design eligible credit, all those issues will more or less, as time passes, will go away. But for the time being, I believe the view that I have expressed of overall comparison, considering the entire ITC, considering the ITC which is reflected till the time you file your 3B, I think these three propositions, I believe, will stand the test of time if this Rule 36(4) is a valid proposition. And on that basis, if you carry out your affairs, then you would be in compliance with law. Now, friends, last issue to discuss here is about the validity. Now, Rule 36(4), is it a valid proposition? Already the matters are pending in courts. I would definitely take a stand that it is not a valid rule, for the simple reason that when you look at section 16(1), it gives the power to prescribe the manner of taking the credit. In the guise of prescribing in the guise of power to prescribe the manner and the conditions for taking the credit, you cannot restrict the credit which is otherwise eligible under subsection 2, because section 16 subsection 2 otherwise allows me to avail the credit subject to the fulfillment of the 4 conditions. Of course, the third condition deals with the actual payment condition. But as you have seen also in the past, in the VAT era, 3 high courts have read down that provision, saying that it's an anti-evasive provision. It only applies in cases where the department doubts the genuineness of the transaction, and only in that situation the aspect of confirmation of actual payment of tax by the vendors would come into play. In cases where department does not doubt the genuineness of the transaction, in such situation this provision has to be read down, and it cannot be applied. So given the fact that section 16 is a complete code by itself, where not only the eligibility but the factors on which that eligibility will be determined, where even the factor of actual payment has been read down by the courts, it's a complete code by itself. It does not leave any room for the government by way of a delegated legislation to curtail what is otherwise permissible under the Act. And therefore, the constitution of Rule 36(4), by way of restricting the credit, which section 16(1) read with 16(2) does not permit the government to carry out, is again in violation of this law. And as you are aware, a rule cannot travel beyond the provisions of the Act. When Act does not grant any power to create some such impediments for the availment of the credit, a rule cannot travel beyond the Act and in fact go and create such impediments. Number 1. Number 2, in fact, such power to restrict the availment of credit on an ad hoc basis is granted by virtue of section 43 capital A, which was introduced in the last Finance Act, but that provision is yet to be notified, that provision is yet to be made operational. So in absence of a provision which actually allows you to carry out such restriction, you cannot assume that you have the power to do it, because if you already had the power to carry out such restriction, then there was no need of bringing in section 43A, which allows you to allows the power to the government to prescribe such restrictions on an ad hoc basis. So of course, the validity of this particular rule, since it has been challenged, the courts are going to look at these 2 factors. Factor number 1, 16(1) read with 16(2) is a complete code by itself, and hence a rule cannot be made contrary to the said provisions. And number 2, when 43A itself grants such power, and if that is not yet notified, of course the rule which has taken a birth even before the parent has taken a birth cannot be a valid rule, and hence even on that aspect this rule is going to be really required to be seen. But as we will discuss further, not following the rule has serious consequences, and therefore I would urge that in as far as possible it is better to follow the rule rather than to not follow it, because as we will discuss, it has a consequences in terms of which may lead to the cancellation of the entire registration. So that is a very serious consequence. So a taxpayer needs to be very careful that in situations where he does not intend to follow the rule, he needs to have a backup plan ready in case if the government goes ahead, the officer rather goes ahead with the process of suspending the registration and then following it up with the cancellation of registration. So only in cases where you feel that there is an extreme hardship involved, where there are genuine reasons of why the credits are not getting reflected in 2A, and that is the reason why you intend to avail the credit, but because of the genuine reasons you are not able to see that credits on the portal. Only in that situation, if that working capital impact would be substantial, only in that situation you may choose to not follow the rule. But as I said, have a backup plan ready with you, because sooner the officer is going to cancel, rather is going to suspend your registration, and hence you should be then ready with the actions that you need to consider once that suspension of registration happens. And hence now the government has assumed so much power by way of giving the officers the right to suspend the registration, that in fact even the option of making all these arguments at a lower stage are going to come at a very high cost of halting the entire business. And hence, as a consultant, of course, when you look at it, the rule in isolation, you will find that it is not a valid rule. But when you look at it from the business perspective, of course, no businessman would be interested in getting his registration suspended on the basis that the ultimate challenge to this particular rule will be successful in the courts. Of course, till that time, the business cannot run, and that the situation, of course, cannot be entertained by any sane business. Second amendment that has come in this particular notification is dealing with the compulsory payment of tax of at least 1% by cash. Again, I mean, we keep on wondering that how such imaginative ideas strike to the persons who are sitting at the north block, but heights of to their creativity and imagination. The new rule is inserted 86B. In fact, they already have a rule in terms of 86A to prevent the entire use of input tax credit. They have a right to block my entire input tax credit ledger. Despite that rule, which is already available to them, which allows them to block my entire input tax credit ledger in situations where they have some suspicion, the new rule mandates that even in situation where there is no suspicion, still you have to compulsorily pay tax to the extent of at least 1% by cash, despite the fact that you must be otherwise having the sufficient balance of input tax credit which is available. Where does this rule apply? It applies to all registered persons who make the supply exceeding 50 lakhs a month. So if you consider it in other way, the persons who are going to have turnover of more than 6 crores on an average 50 lakhs per month would be covered within the ambit of this rule. So those persons have to ensure that out of the total output tax liability, 1%, at least 1% of that output tax liability needs to have been paid by cash. There are exceptions to this rule. The number one exception is that if, let us say, the person is a proprietor, or if it's a partner, then any of the two partners, all the whole-time directors, if the registered person is a company, if that registered person is an association, the managing committee of that association, if that registered person is a trustee, then all the trustees should have paid income tax of more than 1 lakh rupees in each of the last 2 financial years for which the time limit to file the return has expired. So if this rule, since it comes into effect from 1st January 2021, so if, let us say, in the month of January, I am a taxpayer having a turnover of more than 50 lakhs during that particular month, when I compute my liability for January, I find that my tax payable on that turnover, let us assume to be of 60 lakhs for the particular month. Let us assume my liability on that comes to around 12 lakhs. On the 12 lakhs, if I see my input tax credit, because of the nature of my business, I have made substantial purchases of raw material in the month of January. And because of that, it is possible that I'm having sufficient stock. So in future, when I make the supplies in the month of February, March, I would definitely end up paying tax maybe by cash. But for the month of January, I'm having input tax credit of 20 lakhs. So when I compute my January return, what I find that as against my output liability of 12 lakhs, I'm having the ITC available of 20 lakhs. Should I go ahead and file the return declaring 12 lakhs as my output tax, 20 lakhs as my ITC, and hence I don't end up paying a single rupee of tax by way of cash? So should I do that? The answer is you cannot. You need to consider the implications of this new rule 86B. How do you consider those implications? Number one, was my turnover beyond 50 lakhs? The answer is yes, and therefore I am covered by this particular rule. So now I need to search for the exceptions to this rule, that if I am falling under any of these exceptions, then I can go ahead and file the return not paying a single rupee of tax in cash. Otherwise, I will have to pay 1% of 12 lakhs, that is 12,000 rupees of my liability in cash, and the balance I can adjust it by utilizing my credit, which is available of 20 lakhs. So number one exception that I will consider is, let us say this company, this taxpayer is a firm. definitely the firm has 2 or more partners. So I need to consider, let us say the firm is of 4 partners. I need to consider that are the 2 partners out of 4, any of the 2 out of these 4 who have filed their income tax return for assessment year, let us say 1920 and 2021. If they have filed their income tax return for these 2 assessment years, and if I find that they have paid income tax of more than 1 lakh rupees, that payment of income tax could be not by cash. There the cash rule does not apply. It could be by utilizing the TDS credit. But as long as they have declared the income tax liability and they have paid that income tax liability of more than 1 lakh, any of the 2 partners out of the 4, I am then again out of the clutch of this rule. And then I can go ahead and file the return declaring 12 lakhs as liability and use that entire credit to pay that 12 lakh rupees. I don't have to pay 12,000 rupees in cash. Let us say none of the partners have their income tax liability of more than 1 lakh rupees. Out of the 4, none of the partners or only one partner has declared their income tax liability of more than 1 lakh rupees. So I search for the second exception. What is the second exception? Have I claimed the refund in the preceding financial year of unutilized input tax credit to the tune of rupees 1 lakh or more? So I need to look at which year. Since we are talking about 2021, I need to look at 1920. Whether in 1920 financial year, did I apply for the refund on account of accumulated credit due to zero rated supplies? If yes, what was the refund amount? Whether refund amount was more than 1 lakh, and you don't have to stop there. You also have to consider whether you have received that refund amount of more than 1 lakh. Only if you have received the refund amount of more than 1 lakh in 1920, then you are outside the clutch of this rule, and you can go ahead and pay that entire 12 lakh by utilizing the credit. If you find that you have not claimed any refund, or you have claimed the refund less than 1 lakh, or you have claimed the refund of more than 1 lakh but you have not received that refund, then this exception does not apply to you. In that situation, the 12,000 rupees of tax, 1% of 12 lakh, will have to be still paid by cash. You cannot use the entire input tax credit for paying that liability. Third exception. Have I claimed the refund under the inverted rate structure? If answer is yes, of 1 lakh or more in the preceding financial year, again I am outside the clutch of this rule. Otherwise, I will be still within the clutch of this rule. Now, interestingly, there is a fourth exception. What the fourth exception says, you look at the aggregate for this year. So starting from April till today, if in aggregate, if I have paid my tax, so let us say in this January month, I am not going to pay any tax by cash since I am having 20 lakh of credit available with me. But it is possible in the last month, December, I could have paid, let us say 1 lakh in cash. The tax amount of 1 lakh rupees I could have paid by cash. So in that case, what the fourth exception says, you do an aggregate calculation. You start from April, you aggregate till January. You aggregate your tax payable for this period of from April to January, that is the period of this 10 months. If the 10 months liability, let us say, comes to 50 lakhs of this particular taxpayer, if I find that out of this 50 lakhs, which will include the January month liability also of 12 lakhs, if I find that I have discharged 50,000 of tax by cash till date, then I am again outside the clutch of this rule. If I find that I have not discharged, let us say I only discharged 45,000 of liability by cash till date, then I am not outside the clutch of this rule. In that situation, when I file the return for January, I will have to still pay 12,000 rupees, that is 1% of 12 lakh by cash, and the balance amount I can pay by utilizing my input tax credit. In the last exception, of course, government has to take care of their own interest. So the last exception is the government companies, government departments, which are outside the clutch of this particular rule. So these are the exceptions. Having said that, friends, now this is why I am saying this is very interesting. The reason is that if you look at section 49, where the law allows you to discharge your tax liability, the language used under that particular provision is that the input tax credit can be used for discharging any tax liability. Any output tax liability can be paid by utilizing your input tax credit. When the section does not have such restriction, which gives the power to the government to bring in such artificial curtailments by saying that minimum 1% should be paid by cash, can this rule be a valid proposition? Again, I have my doubts. This rule again is traveling much beyond what section 49 provides, which allows any payment of tax by utilizing the input tax credit if the balance is available, and hence by replacing the word any by 99%, because in this particular case only 99% of the tax liability I can pay by using credit. 1% of the liability I have to pay by only using cash, and therefore by replacing that word any by 99% by way of operation of this rule is again traveling beyond what the act provides, and hence again this rule will be questioned. But anyway, this rule is going to hit whom? This rule is going to hit very hard to, number one, new registered taxpayers, because they don't have a background of claiming any refunds in the past, either under inverted rate or either under zero rated supplies. It is possible that those companies are subsidiaries of the foreign companies. They will not have the directors who would have filed their income tax returns where they would have paid income tax of more than 1 lakh rupees in the last 2 years, and they are not covered by any other exceptions, and they are in a trade where initially, because of the setting up of the factory, they will be having sufficient credit available on account of the purchase of capital goods, or for that matter even raw material, and at the same time they will also be undertaking the outward supplies. Despite the fact that such entities are genuine entities having sufficient credit balance to pay the entire tax by cash, by credit, still because of the operation of this rule, and given the fact that they are not covered by any of these 5 exceptions that we discussed, they will still end up paying that 1% of their output tax liability by cash, and that 99% by credit. So to that extent, the amount of working capital requirement would increase. Friends, it is very ironical that given the fact that the rule mandates minimum payment of tax by 1% in situations where what we discussed, the turnover is more than 50 lakhs a month, commissioner has been given a power. What power commissioner has been given? To remove the restriction. So commissioner has been given a power to remove the restriction, which he can of course authorize any of his officer to also do after such verification and safeguards as may be deemed fit. So, and I would say that this is the 6th exception where, let us say in the case that we discussed of a foreign company, subsidiary just incorporated, not having any past in terms of claiming any refunds, none of the directors have filed their income tax returns for the last 2 years where they have declared the tax liability of more than 1 lakh rupees, not falling under any other exceptions and hit by this rule. The only remedy left would be to approach the jurisdictional commissioner, ask him to exercise his power granted by this notification, explain to him the reason why he is not falling under the exception and still he is a genuine taxpayer, and because of sufficient credit balance available with him, he wants to discharge his output tax by utilizing his credit balance only. He does not want to pay 1% by cash. If the commissioner is satisfied, he can make an exception. He can remove the application of this rule in that particular case and allow him to go ahead and file the return by paying the entire tax by credit. But that is again at the end of the commissioner. Voluntarily, if you are covered by this rule, you cannot just ignore the rule and on the portal go ahead and file the return. You need to ensure then the compliance with this. Second set of taxpayers who are going to hit by this rule will be the traders who are operating on a margin of 0.2%, 0.1%. There are a lot of trades in our country which are done on volumes. If you really look at their margins are less than 1%. Now, such traders are going to be hit hardest because of this rule, because if they have, let us say, not filed their income tax returns, declaring the income tax of 1 lakh or more in the last 2 years, since these are the traders who are otherwise not going to be covered under zero rated category under the inverted rate structure, the only remedy left for them will be again to approach the commissioner. But since such traders will not have transparent accounts to convince the commissioner to grant him an exception and remove him from the operation of this rule, such traders are going to face a lot of challenges. And perhaps the rule is also aimed at such traders only, given the way it has been drafted and the exceptions which has been created, that all the traders, this generally happens in the scrap trade, in the metal trade, where the margins are very low and the compliance is not that accurate. Perhaps those are the categories which this rule intends to target, to ensure that the commissioner is aware that if he is going to give an exception to someone, it would be on only valid reasons and not otherwise, so that if such traders are in the business of issuing fake invoicing, keeping margin of less than 1%, because in a fake invoicing racket, if I keep a margin of more than 1%, I will still end up paying some amount by cash. The persons who are doing fake invoicing do not want to even pay single rupee by cash. They want to pay the entire amount by credit only. So such persons who are in the business of fake invoicing, where they'll declare a liability of 50 lakhs, pay the entire 50 lakhs by credit. Those are the persons which are really targeted by this rule, because those persons now cannot pay the entire 50 lakhs by credit. They will have to pay 50,000 by cash. And since they have to pay that 50,000 by cash, the entire trail will be available to the department, that who paid that ultimate money, in which bank account that 50,000 was deposited, from where the amount came into the cash ledger, which was eventually utilized in discharging that liability. And therefore, right now, what is happening, there are cases of fake invoicing where the registrations are obtained in the name of drivers, in the name of maid. And of course, those persons will not have the means of paying even 1% by cash. And hence the real culprit, the mastermind, will have to somehow deposit the money in their bank account to enable the compliance with this rule. And that will give the government the trail to reach that mastermind and to catch him. So that is the aim of this rule, that in cases where you are only doing this activity of fake invoicing, since you are now mandated to pay 1% of the tax by cash, you will have to bring in a transparency, create a chain, and once that chain is available before the department can really go and catch the real person behind that particular racket. So that is the aim. We don't deny the aim is noble. Such culprits are required to be caught, but at the same time, the genuine taxpayers will have to approach the commissioner if they want to really come out from the clutch of this particular rule. The third amendment that I want to discuss is under Rule 21. Now, Rule 21 deals with the cases where registration can be cancelled of a particular taxable registered person. Three categories are now inserted which permits the cancellation of such registration. Number one, if such person is availing the input tax credit in violation of Section 16 or the rules made thereunder. So in a way, they are giving legitimacy to Rule 36(4) by saying that if you are going to avail the credit under Rule 36(4) in excess of what is otherwise eligible, this will become the ground for the cancellation of the registration. So this first situation where a person is going to avail the credit beyond what is permissible under the act or the rules, and therefore the purpose is very clear, the aim is very clear, that if you violate Rule 36(4), this will definitely give the ground to the officer to cancel the registration. Number two, this is very interesting, and this is something which everyone has to pay really good attention to. If the person furnishes the details of outward supplies in GSTR1 for one or more tax periods, which is in excess of the details of outward supplies declared in 3B. So in 3B, if I declare, let us outward supply of 10 lakhs, in GSTR1, if I have declared the outward supplies of 11 lakhs, this becomes again a second situation where the officer has a power to cancel your registration. Now, this is going to hit very hard to everyone. There are a number of reasons. There are genuine reasons of differences between 1 and 3B. What I'll share one illustrative list why figures in 1 could be higher than 3B. It is quite possible that the person might have paid the tax using DRC03. This normally happens, let us say, when my goods are moving, there is some discrepancy in the e-way bill. There is no forge, there is no evasion, but because of some discrepancy, the vehicle is inspected and the officer asks me to pay the tax along with penalty under Section 129. I pay the tax using DRC03, but that invoice, and for the penalty part, I'm going to file an appeal challenging the imposition of penalty under 129. Now, since the tax has already been paid by DRC3, of course, I'm not going to again pay the tax when I file my 3B, because the transaction was of a supply and on which already the tax stands paid, and definitely double tax cannot be paid on the same transaction. But of course, this transaction I am going to report in my one, because the recipient at the other end definitely intends to avail the credit because it was a B2B transaction. So this is a situation where in one I will put the invoice, but in 3B I will not show the liability for the reason that I have already discharged that liability using DRC 03, and hence my one figure would be higher than 3B. In one, it is possible that while reporting B2C, I commit an error. My B2C value was, let us say, 5 lakhs. I erroneously put 6 lakhs. Now, in the next month, my B2C is, let us say, 4 lakhs. Now, I cannot reduce from 4 lakh what I had overstated in the earlier. There is no option in Gstr1 to rectify the figures that I have reported for B2C transactions. So I will continue with what I had reported earlier. In the next month, I will report what is actually my B2C supply. So in that earlier month, my one would be showing a higher figure compared to 3B, because in 3B, I'm not going to, of course, pay the tax on the erroneous reporting that I have done of certain B2B invoices as B2C for that particular month. And therefore, this is a second genuine reason why the figures in one would be higher than figures that I would report in 3B. There can be cases of an amendment in GSTR1. It is quite possible that while filing one, I showed the lower figure vis-a-vis 3B, and I amended that one in the subsequent one. Now, when one compares the original one with my 3B, one will find a discrepancy, but when one considers the amendment that I have done subsequently, the discrepancy might get resolved. But since this portal is not going to understand all these aspects, the portal is going to compare what you show in one for that particular month with what you show in 3B. And if the portal finds that the figures are higher than what is in 3B, it will definitely send a message to the officer that this is a situation where if you want, you can cancel the registration, because that is what now the amendment enables him to do it, since the reporting in one is higher than what he has reported in 3B. There can be cases of credit notes. So it is possible that might be some credit notes might have been missed while reporting in one, but I may consider it in 3B, and hence one would be higher than 3B. These are cases where genuine credit notes have been issued. Credit notes have been issued within the time prescribed under section 34(1). But because of the fact that I made an error while filing one, and that is the reason why one is now showing a higher figure than what I filed in 3B, there can be a situation where again the officer has the power to cancel my registration. Now, friends, these are illustrative cases. Of course, I'm sure a lot of participants here would have many more situations where the figures in one in a particular month could be higher than the figures that they report in 3B. Now, what do you do in such situation? First option is whatever one has been filed erroneously, let it be as it is, because the correction can be made only in the next one that you will file. You cannot amend the one on real-time basis. But at the time of filing 3B, you file it based on the accurate records. So of course, there will be a difference between 1 and 3B. 1 could be higher and 3B could be lower. Once that information goes to the officer's screen, what the law has done is very unfortunate. The law has given the power to the officer to immediately suspend the registration without even calling you to explain why the one is showing a higher figure. There is no room. In fact, on the 36 for at least we have a 5% room. Here there is not even a 0.5% room. If the officer finds that, let us say in January, my one is showing a outward supply of 10 lakhs and my 3B is showing an outward supply of 9.5 lakhs, he has a power that when I file my 3B on 20th, on 21st of February, he can cancel the registration. He can suspend the registration rather. Once he suspends the registration from 21st February onwards, I cannot make a single supply to anyone. I cannot issue any e-way bill. So the only option left will be to close my factory for the time being. Then once the registration is suspended, he will send me a notice giving me 30 days time to reply. In that 30 days, I will prepare a reply. I will understand the reasons for this difference. I will go to him, explain the discrepancy. If he is satisfied, he will revoke the suspension. If he is not satisfied, if he still feels that no, you have really deliberately made some error with a view to evade, and that is why you showed higher figure in 1 vis-a-vis 3B, he will issue a show cause notice for cancelling the registration. Against the show cause notice, adjudication will happen. If the adjudicating authority, which will be an authority different from the person who issued the notice, if that adjudicating authority finds that it is a fit case to cancel, he will cancel it. And then, as I said earlier, the only remedy available is either you challenge that cancellation straight away to the High Court if you have genuine reasons for this discrepancy, or you file an appeal. But as I said earlier, the course of appeal, in my opinion, would not really be good enough, because it will take time. Until that time, unless the registration is not revoked, the businessman would not be able to do the business. So very harsh provisions has been introduced, giving the officer full freedom to suspend the registration merely on the ground that the figure that I report in 1 is higher than the figure that I report in 3B, despite the fact that I have sufficient explanation to justify that reporting. Now, what do you do in this case? Now, when this notification came, immediately on the Twitter handle, the CBICS put one document saying myths versus facts, because when a lot of consultants, lot of professionals understood the far-reaching implications of this amendment, giving the officer the right to suspend the registration merely on this ground, they created a lot of hue and cry on social media platforms, saying that this is totally, we are going into a totally different regime than what was promised to us when GST was implemented. So government CBIC came out with a document saying myths versus facts, where they say that this is a myth. We are not going to suspend the registration in each and every discrepancy. The claim of CBIC is that we have sophisticated systems at their end, which will really target only the evaders, and only in those cases these powers would be invoked by the officers, where they will move with the suspension of registration. In all other cases, they say that we will not invoke this particular power. But as you all understand, anything written on Twitter is not law. The rule does not say anything about that, about cases where only when the discrepancies are substantial in nature, they will invoke it. Otherwise, they will not invoke it. The rule gives a blanket power to suspend the registration, even if there is a difference of 1 rupee between my 1 and 3B, as far as outward supplies are concerned. So the only hope is that what they have stated in their press note on the on the Twitter, it needs to be incorporated in the rule. Those safeguards needs to be incorporated under the rule. In absence of that safeguard, this rule is prone for harassment of genuine taxpayers. This rule is prone for a lot of unnecessary botherations from the side of the department. Now, having said that, the last situation where again the power of suspension which results into cancellation can be invoked is if one violates 86B, Rule 86B that we discussed, of minimum 1% of payment of tax by cash, subject to the exceptions. If I violate that rule also, then also I will be my registration can be suspended and eventually cancelled. Now, with that background, let us consider two aspects, very interesting aspects of this particular amendment, purely from legal angle. One is, when you look at the Act, what Section 29 provides as far as the suspension of registration is very limited situation where either the business has been closed or where the taxpayer himself applies for the cancellation. And during the interim period, to avoid the taxpayer to keep filing nil returns, the power of suspension has been granted to the officer to suspend the registration. The Act never envisages these three situations that we just discussed, which enables the officer to suspend the registration. So I would take a stand that a rule going beyond the Act by saying that despite whatever you have written in the Act, these are the three additional situations wherein also you can invoke the power of suspension is clearly traveling much beyond what is contained in the Act itself. Number two, and this is very important, friends, very important to understand. See, when our constitution was introduced, there was a big debate before the Constituent Assembly that unlike America, where they have a due process clause in the Constitution itself, which mandates that any rights of the taxpayer, if you are going to disturb, you cannot disturb it unless the due process is followed. What the Americans consider to be a due process is a valid right of hearing, and to consider the representation submissions made by the taxpayer, and only thereafter you can go ahead with any action which violates my right or which interferes with my activity. So that is a due process clause which is enshrined in the American Constitution itself. When Indian Constitution was debated, they purposefully said that we don't want to have a due process clause in our Constitution. So when they drafted Article 14, 19 and 21, they removed the due process clause which was there in the draft, and they said that in accordance with law, if law is a valid law and if that law provides that no hearing is to be granted, then that is fine. Even without hearing, you can take away the rights of the citizens. So initial view of the Supreme Court after the Constitution was implemented was that Indian Constitution is different from American Constitution. Here due process is not warranted. We have to look at the act of legislator. If the legislation thinks fit that due process is not to be granted, court cannot interfere and grant that fairness and the rules of natural justice to that particular taxpayer. But when emergency came in 75, the courts got worried that if the same stand continues of the court, Supreme Court, it may result into a situation where our country may go in a direction which all of us may not want. So the Supreme Court then assumed a role of an activist. And in the first decision in case of Maneka Gandhi, where the case was that her passport was revoked without even giving her a hearing to justify the reasons for why her passport should not be revoked. Merely by exercising the power granted under the Indian Passport Act, the authority revoked her passport and prevented her from traveling out of India. She challenged that particular executive action before the court. It matter went up to the Supreme Court, and what Supreme Court held is that we agree that due process clause is not there in the Indian Constitution. But if we apply Article 14, which says that every person should be treated equal before the law, if the due process is not followed, if the natural justice is not followed, then this will give subjectivity to the officers. And once subjectivity is given to them, it is possible that they are not going to treat every citizen as equal, because the moment you give subjectivity to the executive, that subjective judgment would definitely result into an inequality, because based on that subjective assessment, they will treat different citizens differently. So the Supreme Court said in Maneka Gandhi's case that even though due process and rules of natural justice are not expressly written in the Constitution, because of the fact that Article 14 mandates that everyone should be treated equally in the country, that is the reason why for equal treatment, subjectivity needs to be eliminated. And that is the reason why rules of natural justice have to be followed in any executive action. If the rules of natural justice are not followed, then it violates Article 14 of the Constitution, and therefore the due process in that manner was indirectly borrowed into the Indian Constitution by the Supreme Court in Maneka Gandhi's first case. Then in the commercial dispute, the matter came up in the case of Tata Services, where their telecommunication license, the tender for telecommunication license was issued in such a manner that they otherwise would have been qualified or not qualified for applying for the tender. So they challenged that particular executive action again before the Supreme Court. Supreme Court in Tata Services laid down a very important proposition that has then been consistently followed by the courts, that even if there is a law which says that we will not give a right of hearing to a citizen before taking any action against the citizen, that law will not stand the test unless and otherwise that law respects the right, respects the natural, fairness, the process, and gives an opportunity to that other citizen, to the other party, to explain the reasons for why that detrimental action should not be taken against that person. So I would submit that this power of allowing a suspension of registration even without giving a notice, without even seeking a clarification from the taxpayer, merely on the ground that one figure in GST1 is higher than what you have reported in 3B, is not aligned with the view taken by the Supreme Court, where the due process needs to be followed, where the rules of natural justice demands that officer must first ask from the taxpayer the reason for deviation, and only if he is not satisfied only then he can move with the suspension. Merely on the comparison of two figures, it cannot be suspended. So of course, all these arguments would be coming up before the courts now, because this validity of this rule is going to be seriously challenged. But as a common taxpayer who cannot really afford all these challenges, what he should do? Ideally, if the working capital impact is not there, kindly stick with GSTR1 figures. Kindly don't exceed the GSTR1 figures. Whatever corrections that you want to do in 3B, kindly do it by DRC03, so that as long as 3B and 1 are aligned in a way that my figure of outward supply in 3B is not going to exceed what I report in 1, you will be at least avoid the triggering of this particular rule. But once triggered, as I said, immediately rush to the officer, convince him about the anomaly, document every month. In our office also, we have instructed that whenever clients want filing to be done, if there is any discrepancy between 1 and 3B, on 20th, the moment you file 3B, before filing 3B, please send a communication to your client saying that when you filed 1 on 11th of February, your figure was 10 lakhs. Now you are giving in 3B figure of 9.5 lakhs. Please justify this 50,000. Please keep that entire file ready with you. Because if tomorrow, if the suspension of registration happens, immediately the data must be available so that you can rush to that officer and explain the anomaly so that he can revoke the suspension. Because unless he is not satisfied, he will not revoke. Until it is not revoked, you cannot do any business. So that is why it becomes very important now going forward that anything you do in 1 and not getting captured in 3B, if there is a genuine reason for it, kindly document that anomaly, kindly keep that file ready. Because if the suspension happens, you should be available with the data. Another important change has to do with the registration process. Now, biometric test is getting introduced. Earlier, when the registrations were granted, the verification could have been done. In fact, verification was never done. Then the law rules were amended. Post registration verification was introduced, and now we are going back to the VAT regime, where pre-registration verification is now again introduced. If the officer has doubts about the registration application, he has been now granted the power to visit the premises, to inspect it, to see whether genuine activities only to be carried out, and only if he is satisfied, he will grant the registration. So unlike a normal registration window of 7 days from the date of application, in cases where the officer wants the physical verification to be done, the registration will be granted within a period of 30 days. So he gets an extended time. So if a businessman is planning to do a new business, kindly make sure that because of this new requirement of 30 days, where the registration time it could take, in case where if the officer decides to visit the place of business, so accordingly he must plan his affairs so that his business is not unnecessarily stuck for the want of the receipt of the registration certificate. Another important change is GSTR1 suspension. In cases where you have not filed 3B for the past 2 months, you will not be able to file 1. System is going to stop you from filing 1 if you have not filed 3B for the past 2 months. In case of quarterly taxpayer, it is single quarter. So if you have not filed 3B for the last quarter, you will not be able to file 1 subsequently. In cases of where the 1% rule applies, Rule 86B, instead of 2 months 3B, you need to ensure that you should have filed at least last 1 month 3B should only be pending. Only in that situation you will be able to file 1, otherwise 1 will be suspended. Again, this is aimed at curbing the menace of fake invoicing, where persons used to file 1, but they never used to file 3B. And they used to vanish before the department actually used to catch such persons, and hence again this is aimed at curbing that menace by ensuring that you can file 1 only if your 3Bs are not pending. The last important amendment is e-way bill. The validity of e-way bill has been reduced by 50%. So earlier the journey of 100 kilometers you were given 1 day. Now in that single day you will have to do a journey of 200 kilometers. So if let us say the distance is of 600 kilometers, earlier you used to get day 1, that is the day on which you generate the e-way bill, plus 6 more days because that limit applies from the midnight of the day on which you generate the e-way bill. So you used to get in a way 7 days to complete that journey of 600 kilometers. Now you will get 4 days, that is the first day plus 3 days to complete the journey of 600 kilometers. So 50% reduction of travel time has taken place. If let us say the validity expires in between and the goods have not reached the destination, the only remedy is that you have to seek for an extension of e-way bill within 4 hours from the date from the time of expiry. Again, a commissioner has been given the power to extend that validity, but only in special cases he would do it if you are able to demonstrate why the truck could not complete the journey within the allotted time frame. If there are no reasons, then that e-way bill, the expired e-way bill, will not be a valid e-way bill. And if the truck is then detained, and if the officer finds that the e-way bill is already expired, he will definitely invoke section 129 and he will seek to recover the tax and the penalty on that particular transaction. So again, be very careful in ensuring that the movement happens within the revised validity, which has now been curtailed by 50%. This again comes into effect from 1st of January. So at least the movements that will happen now, that would not be hit, but any e-way bill which is generated on or after 1st January 21 will have the new expiry and not the current expiry, and hence those movements will have to be understood. Now friends, certain provisions quickly in next 5 minutes will complete. Certain provisions of Finance Act 2020 which although were inserted in the act last year in the current year, but it is now made effective from the 1st January 2021. Which are those provisions? As far as composition schemes are concerned, composition scheme providers are now prohibited to make any supply of services as far as the composition scheme of goods are concerned beyond the tolerance of 10%. So that anyway, that was already there as part of notification. Now that restriction becomes part of the act. So really materially there is no change. This is a very important change, ITC for the debit notes. Under the current provisions of 16.4, the date of availment of input tax credit on the debit notes is linked with the date of the original invoice against which the debit note was issued. So let us take a case where invoice was issued in financial year 1890. Because of late payment, let us say the supplier wants to recover the interest also on the overdue payment. Now interest is paid now to him. So of course, in case of interest, as you understand, the time of supply is the date of receipt. So he will prepare the debit note today for the invoice that was issued already in financial year 1890. Now on that debit note, can you avail the credit? If you literally read section 16.4, now you will find that you cannot avail the credit, because the date of availment of credit for the debit note has to be understood vis-a-vis the date of invoice. And since the invoice was issued in 1890, the time limit to avail the credit for 1819 already expires on 20th October 2019. And hence this debit note which is issued now, you cannot avail the ITC. So it is clearly a erroneous view. In fact, in my opinion, the 16.4 in case of debit note should apply qua the date of debit note only, even before this amendment. But anyhow, an amendment has been made, and which will be effective from 1st January, that now onwards the debit note credit entitlement time limits would be determined based on the date of debit note only and not on the date of the original invoice. So let us say the debit note is issued in January 21. You can avail the credit of that debit note till 20th October 21. So that would be now it would not be an issue. Voluntary registration can also be cancelled. Earlier the law did not provide it for the cancellation of voluntary registration. Now the amendment has been made in the act, which permits that if someone has obtained a voluntary registration, he can apply for cancellation also. Again, very important amendment, again related to fake invoicing, that a new penalty has been introduced in section 122 by way of subsection 1A, saying that the kingpin, the real culprit, the real beneficiary of the fake invoicing would also be liable for penalty over and above the registered person in whose name the fake invoicing has been done. So again, the aim is to really catch the beneficiaries. The beneficiaries has also been defined, that the person who has basically at whose directions that particular registered person has acted, and who has basically also received the benefit of that fake invoicing. So if the money trail is available before the department, which reaches to a person on whose direction this registered person generated the fake invoicing, then not only the registered person, but even such person at whose direction he did the activity would also be liable for penalty. Similar amendment has been made in section 132, which deals with imprisonment, prosecution, which results into imprisonment and fine. Again, here also the beneficiaries would also be liable for imprisonment over and above the registered taxpayer. The last amendment in Schedule 2, where there was an entry in para 4 which has been amended, but again not that significant amendment, because as you understand, Schedule 2 is only a classificatory schedule. It does not determine whether a transaction is a supply or not, and hence there was some anomaly in that schedule in para 4 which got amended, and hence now Schedule 2 as such is purely a classificatory schedule. So once it is once you identify there is a supply, then you have to read Schedule 2 to consider whether it is a supply of goods or services. Now, how much time do we have, Jitubhai?
We have 15 minutes, 15 to 20 minutes. You can no issue at all.
Fine. 15 minutes. I will not take more than 15 minutes. So the first part of the agenda, which was very important, we have already done with. Now going to the quarterly finance scheme. Basically, the way the amendments that we just discussed, I would believe that none of the vendors, none of the suppliers rather, would not want their vendors to be under the quarterly filer scheme, because as we discussed, ultimately my credit availment is based on the filings done by the vendors, and therefore I would want that vendors also file their Gstr1 on monthly basis, so that the reflection of that in my 2A happens accurately, so that I don't come into the clutch of Rule 36(4). And therefore, although this scheme has been introduced, it will more benefit the B2C trade. It may not, in my opinion, benefit the B2B trade, because in case of B2B trade, if my customer says I have to do monthly filing, then really this scheme vis-a-vis the current mechanism, really there is not much of a difference. So rather I would then continue with the current scheme of monthly filing of 1 and 3B, rather than shift into this scheme of ascertaining my estimated liability and then paying the tax and then taking the risk of interest. So we'll come to that later. So for B2B transactions where the customers want the reflection of the invoices on monthly basis, I would believe that the current scheme is what the taxpayer should stick with, rather than opting for this particular scheme. But in cases where the customer does not really mind, even if I do the quarterly filing, or in B2C transactions where the customer really is not going to take any input tax credit, in those cases this scheme is can be exercised. So 4 notifications have been issued and a circular has been issued, circular 143, detailing various aspects of the scheme. First and foremost, who are eligible for the scheme: the taxpayers whose aggregate turnover is up to 5 crores in any of the preceding year are eligible under the scheme. So when you talk about, because the scheme comes into effect from January 21, so the preceding year would be 1920. So in 1920, if your turnover was up to 5 crores, aggregate turnover, please keep that in mind. So aggregate turnover will include even exempt supplies. It will not be just limited to taxable supplies. So if my aggregate turnover is up to 5 crores in 1920, I can opt for the scheme from January 21. There is a catch here, that if in current year, if already I have crossed 5 crores, then of course I cannot opt for the scheme. I will have to stick with the existing scheme of monthly filing of GSTR1 and monthly payment of tax by GSTR3. So only in situation where last year my turnover was up to 5 crores and in current year till date it has not crossed 5 crores, then I become eligible to opt for the scheme. Otherwise I am not eligible to opt for this particular scheme. Now, to facilitate the taxpayers, what they have done on the common portal is very interesting. Please keep this in mind, because this will basically is something what one has to consider. What on the portal they are trying to do is, they are saying that we as a facility are giving a default option that you have opted for the scheme. So unless you don't want to opt for the scheme, you will have to tell us that you want to opt out. So a default option will be opting in under the scheme from 1st January onwards, and if you don't want to opt in, you will have to intimate that you want to opt out from the scheme. Now, for whom this default option will apply, what they have laid down is that for taxpayers who are aggregate turnover is up to 1.5 crores, that is the small taxpayers whose aggregate turnover where they have a facility of filing one on quarterly basis. So taxpayers whose turnover is up to 1.5 crores, and in the current year who have opted for quarterly filing of GST1 by default would be considered to have been opting for this particular scheme. So those taxpayers, because those are the taxpayers who as such have opted for quarterly filing of one, so they would have definitely considered the implications of Rule 36(4). And after that, if they have decided for quarterly filing in GST1, the circular says that such taxpayers would be defaulted to be opting for this particular scheme. So if for such taxpayers, if now because of this 5% limitation now, which has now been brought down in 36(4) from 10 to 5, it is quite possible that few of the taxpayers who currently have opted for quarterly filing may be pushed by their customers for monthly filing. So in that situation, you will have to go on the portal and you will have to change. Now that change has to happen before 31st of January. So for such taxpayers who by default have been opted for this scheme, by 31st January, you will have to go on the portal and you will have to opt out if for January month and onwards you want to do a monthly filing of GST1 and monthly filing of 3B. Another category who would be by default who would be opted in for this scheme is those taxpayers having turnover of more than 1.5 crores but up to 5 crores. So these are the taxpayers who are as such required to do monthly filing of GST1. So those taxpayers are the category who will be again by default considered to be covered by the scheme. So, and the third category are again the dealers who are having turnover up to 1.5 crores and who are filing one on monthly basis. So up to 1.5 crores, all are by default covered under the scheme on the portal, and from 1.5 to 5 crores again default option would be quarterly. Only a person who is up to 1.5 crores and who is right now filing one on monthly basis, he will not be by default considered to be opting for the scheme. The reason is very clear that if someone who is otherwise right now also could have filed one on quarterly basis, if he has not opted for filing one on quarterly basis, despite the fact that his turnover is only up to 1.5 crores, and he has opted to file it on monthly basis, the system recognizes that such person may not be interested in this scheme. So such person by default will not be covered under this scheme. If he wants to get covered, he will have to intimate that again the date would be 31st January. So that again that intimation such person will have to give, who by default will not be intimated. For persons who are up to 1.5 crores and doing quarterly filing of one, or persons, any person between 1.5 to 5 crores, that will be by default covered under the scheme. And if any of the person wants to opt out, he will have to do that on the portal before 31st January of 2021. Now, what are the basic parameters of the scheme? The basic parameters is that tax payment would remain monthly. Tax payment is not going to shift to quarter. Only what is going to shift is filing of GSTR1 and filing of 3B. Both these forms will have to be filed on quarterly basis and not on monthly basis. Now, this will of course will pose a serious challenge to those taxpayers who want to take the benefit, but the customers insist that your invoice should be visible to us for the purpose of ensuring that our ITC is not denied on the basis of your opting for the quarterly scheme. So they created a window by saying that a person who is opting for this scheme would be given an invoice furnishing facility. So under that invoice furnishing facility, a person who is opting under the scheme can do the furnishing of the invoices on monthly basis. So if let us say I am a registered person having turnover of up to 5 crores, I want to opt for the scheme. Once I opt for the scheme, let us say from January, I opt for the scheme because it needs to be done on quarterly basis. You cannot do it in between the quarter. Once I do it for the month of January, For January, I have an option of furnishing the invoices in the invoice furnishing facility. Now, what is that invoice furnishing facility? It is similar to one, but not one. How? So for January, I am given a date that till 13th February, that is 13th of the succeeding month, I can furnish the invoices for the month of January under the invoice furnishing facility. I cannot file one because one, as I said earlier, has to be done on quarterly basis for the persons who are going to opt for this scheme. I cannot file 3B. Both of them will happen after the end of the quarter. Only now what will happen is two things. I will be able to furnish the invoices of January on the portal till 13th of February, number one. Number two, I have to make the monthly payment of tax by using a form called PMT06. Again, that is to be done through the portal. So on monthly basis, such taxpayer has to do two activity. One is payment of tax. Second is, if he wants to furnish the invoices, he can do it using the invoice furnishing facility. On the invoice furnishing facility, there is a cap that I cannot furnish invoices above 50 lakhs. So for example, if January, if I have issued B2B invoices of 60 lakhs and I am opting for this scheme, when I use the invoice furnishing facility on 13th February to furnish the invoices, I cannot furnish the all 60 lakh invoices. I can only furnish invoices up to 50 lakhs. So there will be invoices of 10 lakhs which I will not be able to furnish on the invoice furnishing facility. When can I furnish that invoices of 10 lakhs? At the time of filing of Gstr1. So Gstr1 that I need to file for this particular quarter, that is from January, February and March, that filing which will happen on the 11th of April. In that filing, there will be auto-populated data of the 50 lakh invoices which I have furnished right now in January till 13 February, plus I will have to add the 10 lakh of invoices which were missed now because I am not allowed to furnish that invoices now because of the 50 lakh cap. The 10 lakh of additional invoices I will report in GSTR1 over and above the auto drafted figure of 50 lakhs which will come from the invoice furnishing facility, and then I will file my GSTR1 of 60 lakhs considering the total supply that I have done in the month of January. So that is how it will work. Invoice furnishing facility, again, right now what is not clear is that if let us say I furnish right now invoice of 50 lakhs under the invoice furnishing facility, and whether I will be allowed to make the corrections in GSTR1 when I do that filing in April. Logically they should allow the correction, because even if I had opted for monthly filing, I could have corrected the one in the next month. Because of now quarterly filing of one, logically I should be able to rectify the data which I have uploaded in the invoice furnishing facility there. Now on the aspect of payment, now as far as the monthly payment of tax is concerned, the scheme gives you two options. One is there is a fixed sum method. Fixed sum method is that for January I have to make the monthly payment. Now whatever invoice furnishing facility I use, that is separate. That I may furnish 50 lakh invoices, 40 lakh invoices, that is totally different. For monthly payment under the fixed sum method, what the notification provides, that you look at what you did, what payment you did in the last quarter. If I was under the quarterly payment scheme, so this fixed sum payment will apply from which period? It will not apply for January, February, March quarter. Why? Because there is no quarterly payment scheme right now for the normal taxpayers. That only will come into play from April 21 onwards, when you will have the March quarter data available with the portal to determine your tax liability. Under the fixed sum method, what the notification read with circular provides, that let us say my CGST payment that I did, that is the cash payment that I did in the last quarter was of 100 rupees. What the scheme says, that 35% of that 100 I will have to pay in January. So in a way, this entire payment is divided into three components because the quarter has 3 months. So 35%, so 35 rupees I will have to pay in January for the month of January. 35 rupees I will have to pay for the month of February, and the actual balance, because it is not possible that for March quarter my liability would be exactly equal to what I paid in the last quarter. In this quarter I may have 120, I may have 80 rupees of liability. So when in the last quarter, last month of the quarter, when I go for filing of GSTR 3B for this quarter, what will the portal do? Whatever payment of 35 and 35 that I did on ad hoc basis, that will be considered as a deposit that will be adjusted against my actual liability. So my, let us say, actual liability is 80 for these 3 months together. Then the balance 10 rupees I will have to pay at the time of filing of 3B. That needs to happen within 25 days from the end of the quarter. So for March, the 3B needs to be filed by 25th of April. What if, let us say, this 35, the 70 rupees that I have done on ad hoc basis is more than actual liability? Because it is possible that businesses goes through cycles, and the actual liability for these 3 months could be not 70, it could be 50. What the circular says that the 20 rupees of additional deposit that you have done on ad hoc basis under the fixed sum method, that you can adjust either in the subsequent payment, or you can even claim the refund of that 20 rupees that you deposited under the fixed sum method. So the fixed sum method takes your past quarter payment as a base. On ad hoc basis, 35% of that is supposed to be done at the end of month number 1. Balance 35% at the end of month number 2. At the end of month number 3, when you have the actual data of that quarter available, you determine your actual liability. From that, you deduct the deposit that you have made for the first 2 months. If thereafter, if there is still some payment to be done, you can do that payment and file 3B. If you end up with some excess payment, you can claim the refund, or you can adjust it in the subsequent period. There's another method called as self-assessment method for making the payment. What it says, forget about the last quarter or last month data. What you pay every month is based on your self-assessment, what you would have otherwise paid if you had filed your 3B on monthly basis. So for January, if let us say in the invoice furnishing facility, I am uploading invoices of 40 lakhs, I know my output tax payable. I know the input tax credit that I am entitled to based on the auto drafted 2A or 2B. Then I know what is the approximate actual payment that I need to do. So the second method says you actually pay what you actually are required to do for this particular month. So ultimately, I would say that if someone is actually going to follow the self-assessment method for making the payment of tax, and one would also be using the invoice furnishing facility, ultimately one is coming back to the GSTR1 and 3B scheme only on monthly basis. There is no gap. The reason is, under the self-assessment method, if let us say I make an error in self-assessment, if based on self-assessment I was supposed to pay 1 lakh, if I have paid only 80,000, the interest calculation of 20,000 runs from month 1 itself. It does not run from the end of the quarter. Unlike the fixed payment method, the fixed payment method, as long as I pay 35% based on last quarter or last month data, as long as I pay that ad hoc basis, any difference that I have to pay at the end of the quarter, the interest will start only from the due date of filing of 3B. So let us say in our example, when I paid 35 and 35, and actual liability comes out to be 80, and the 10 rupees that I need to deposit when I file 3B for the March quarter, if on 25th April I paid 10 and I file 3B, there will be no interest. But if I file 3B late by 5 days, then the interest of the 10 rupees will be only for that 5 days under the fixed sum method. But under the self-assessment method, if end of day, if I find that 10 rupees was payable, and if the 10 rupees relates to the first month of January, then my due date, my interest calculation will start from the due date of making the payment for the month of January, that is from 20th February till actual payment date. It will not start from the 25th April till actual payment date. So ultimately, the invoice furnishing facility coupled with the self-assessment payment method is nothing but GSTR1 and 3B on monthly basis. So only those taxpayers who really want to go for the fixed sum method and who does not want to exercise the facility of invoice furnishing, that is where you have largely B2C transactions, only those taxpayers will really be able to take the maximum benefit of this scheme. Otherwise, all other taxpayers would be more or less doing the compliance in the similar way, in the way in which right now the compliance is being done. Late fees would not apply, of course, because since 3B and 1 is to be filed on quarterly basis, there is no as such monthly filing. Only monthly, as I discussed under the scheme, is only the invoice furnishing facility, which is optional, and the monthly payment of tax. There is no as such return to be filed on monthly basis, and hence the late fee would only apply if you miss filing 3B and 1 of that particular quarter by the respective due days. Only in that situation the late fee would apply. Otherwise, on monthly basis, the late fee will not apply. So in a way, the scheme is good for B2C transactions or a B2B transaction where the vendor does not want you to exercise the invoice furnishing facility feature. In cases where your customers want you to exercise the invoice furnishing facility feature, and then in that situation I would submit that the current scheme is much better, and in that situation I don't think there is material difference between the QRMP scheme and the current scheme. So with that I end. I again thank the Bhuj branch for giving me this opportunity. I thank all the participants that in the busy schedule they have shared their valuable time, and I hope that I have been able to throw light on some interesting developments that have taken place in the last 1 week or so. So with that, I again thank the branch. Thank you.
Thank you, Abhay, for sparing your valuable time and lucid presentations. Now I request Deepbhai Koradia to give vote of thanks.
On behalf of the Bhuj branch of WIRC of ICAI, I take this opportunity to propose vote of thanks. I extend a very hearty vote of thanks to our chief guest and Vice President CA Nihar Jambusaria sir, who spared his time from his busy schedule to grace the occasion. On behalf of Bhuj branch of WIRC of ICAI, I would like to thank Sri CA Aniket Talati for sparing his valuable time. Again, on behalf of the Bhuj branch and on behalf of the management committee, I would like to thank our speaker, CA Sri Abhay Desai sir, for sharing your knowledge and wisdom on the current issues under GST. Sir, I still remember you came to Bhuj on 20th October, which was the last date to take the credit for the last year. So even on that date, the hall was full. And I believe the same thing has been repeated today. That shows how we love your opinions, your clear thought process, the way you make things understandable and resolve our queries. And also, we love your anecdotes and sense of humor for connecting that issue during the website launch with GST issues. Thank you, sir, for sparing your valuable time. I would like to thank each and every participant to attend this seminar in this from their busy schedules. Thanks a lot, sir. Thank you very much, sir.
Thank you. Bye-bye.